Hey, welcome to ATI Pro Media Live at 9. Thanks for joining us today. We're going to talk some grain and livestock markets, going to talk the headlines and some of the headlines that don't exist. And we'll see where we go here today. But markets overnight, I think the big story is U.S. China trade deal on the horizon, some potential prospects there. That's lifting things a little bit, providing some support. We'll see if it actually comes to fruition. But yeah, without further ado, let's jump into your quotes and jump into the show. Thanks for joining us here. July corn is up a penny and a quarter, 4.56 3/4. New crop D's corn is up 2.5 at 4.43 3/4. July beans are 8 cents firmer at 10.49. Nove new crop beans are 11 3/4 of a cent firmer at 10.31. Soy oil is 30 points firmer. Soy meal is 2.30 firmer at 2.95.40. Wheat market, we got Chicago wheat down a penny. KC wheat is down 6 cents at 5.32. Cotton, new crop cotton is up 20 cents at 69.75 there. Over in your meat markets, we got feeder cattle leaking weaker, some red on the screen there. August feeders are down 37.5 at 298.825. They tried to tickle 300, didn't quite get there. Live cattle, we got the June contract down 100 points. We got August down relatively unchanged, and when you look at your October and December contracts, they're flat to a tick higher. So down in the front, up in the back. Hog market, very similar, relatively unchanged in your hog market. Looking over at crude oil, we're down 15 points at 58.98. Diesel is a penny weaker. Nat gas is 12 cents firmer. The Dow is 240 points firmer, 41,155. The S&P up 24. The NASDAQ is 55 firmer. The Russell 13.5 firmer. Bitcoin's up 2,190, 97,600, approaching 100,000. Gold's off 20 points. Silver's down 30 cents at 32.80 an ounce. And the dollar is 17 cents firmer at 99.225. So knocking on that $100 level on the US dollar index. That's a snapshot of where your markets are at. Catching a little bid in your corn and beans up double digits. Wheat market trying to hang in there. We got some rain out here in Kansas, Oklahoma area. Woke up to another nice shower soaker. So locally, I got some backyarditis with that recent rainfall. Try to avoid the backyarditis, but it's good to see, and we're thankful for it. So, big headline overnight. Yesterday is in a highlight of the What's Caught My Eye section from ATI Pro Media premium subscribers. They get this in their email. What's caught my hope on the horizon for a U.S. China trade deal? Wire services indicate Besant and top U.S. trade officials will meet their Chinese counterparts in Geneva this weekend to talk trade deal. So some optimism on U.S. China trade talks. So stocks and commodities are responding accordingly. Commodities probably holding those gains a little, or stocks are holding those gains a little better than the commodities are. I saw a quote yesterday that I thought was interesting. I'm going to share it with you. Not sure where it came from, but I thought it was applicable to what's going on here recently. So when a predicted economic Armageddon fails to materialize, the market has to unprice the risk associated with that Armageddon, and often you see a bullish reaction accordingly. So when the economy fails to fall apart and we don't see that Armageddon, the reaction can often be bullish, and we can often go higher from there. And I think that may be somewhat of what we're seeing here is the world not completely falling apart. Although stocks are off, they're bouncing back nicely. So Paul Dubrovik, one of our commercial brokers with ATI, summed it up well in this morning, talking about U.S. China trade deal. Just to keep in mind that these are preliminary talks, and we all hope that it leads to further progress towards favorable trade deal. But we're likely to see, headlines shift from favorable to, unfavorable, back to favorable. Some jockeying around here as we navigate these talks. And then keep in mind, Trump met with the Canadian Prime Minister Carney yesterday and really resulted in a whole lot of nothing coming out of that meeting. So two polarizing opposites into the spectrum politicians, and didn't get a whole lot out there, but it was constructive talks, supposedly. So we'll see. All right. Rest on the docket here. We got the Fed rate decision today. Many looking for it to be unchanged. No move from the Fed on the rate. All eyes will be on Fed Chair Powell's press conference this afternoon. He'll face some tough questions about tariffs, trade, and they will dissect where his mind is at with regard to the future of rate decision going forward. We'll also be looking at the dot plot and seeing, across the spectrum of those in the Fed, where they see rates going forward, and will there be any adjustments to the dot plot. I believe the CME Fed Watch is pricing in 3 to 4 cuts between now and December. That's different than where we were a month ago when the Fed Watch was looking for 4 to 5 cuts. So keep an eye on that here this afternoon. Fed rate decision here later today. So cattle markets, though. Hey, more new highs for the cattle markets. They're giving a little bit back here out of the gate. But August feeders approaching $300. Will they trade 300? When will they? Likely meet some resistance there, as that's a nice psychologically round number a lot of people were looking for. So maybe we'll get there. Had some light cash cattle trade in the South yesterday, 218, which is steady to $2 higher. When you get cash trade early in the week, that's a strong sign, a good sign that packers want to buy and need to buy. Cash trade is called higher this week here in the cattle market. So good to see that early trade happening. Keep an eye on those August feeders. Keep an eye on your cattle markets. Let's look at some charts. It's a good day for charts on Wednesday. So let's look at a few charts here. Let's pull these in. I'm going to take a sip of coffee, wet my whistle first. Thanks for joining us again. As always, every day, talking about your markets. This is that time of year where, I don't know, a lot of people are busy in the field. The headlines are kind of stale and regurgitated over and over and over again. But it's also a time where your markets can often, kind of lull you to sleep. So adjust your plans. Don't fall asleep at the wheel here. Let's pull in and look at a few charts. What do I got first here? All right, we got July corn, old crop corn. Looking at it, this is a long-term chart going back to March of last year. So this would be, the springtime of 24, sold off into the summer and the fall. Big sell-off, rallied December into February, and then sold off significantly back to the 200-day moving average. And here we are. That keep an eye on that red line, that 200-day moving average. We traded up to it overnight on that news of U.S. China trade hopes, but we've got a reversal topping tail type doji daily candle. I'm going to zoom in on this. Enhance. One more. This is a topping tail type doji candle where we just knocked on that 200-day moving average and have seen some price rejection and sold off there. Keep an eye on these recent near-term lows. I'm going to zoom back out there. This 450 area on the July contract has been key support to hold. You break below that and you open the door down to this, 440, 430 area on that. So testing some key support here out of the gate. Looking at the RSI, not quite oversold, so still room there to go on the RSI. All right, next on the docket here, let's look at a bean chart. Let's look at July beans. 200-day moving average, just been congestion there. We've seen it rejected last spring at the 200. Here in the February timeframe, had the December to February rally, hit the 200, sold off, back to the 200, just been hanging out. Lots of congestion in this area at the 200-day moving average on your July contract. Beans are trying to find the next story and the identity and the direction going forward. They need a new story. Grain bulls, grain bears. It seems like grain bulls need a story more than the grain bears do. So keep an eye on that. But 200-day moving average, pivoting right there. Whole lot of nothing happening in your bean market for now. We got a May WASD Monday. Maybe that'll shake things up. All right, let's look at KC wheat, July KC wheat, new crop wheat, well below the 200-day moving average. Looking back at this, I believe probably a contract high back here, May 28th of a year ago, we were in that 760 area, sold off down to a 550 area, rallied back up into the 650 area. We had a February 19th high of 653 and sold off down to a recent low just last week of 525. So $1.28 trading range over the last couple months. We're 55 cents below the 200-day moving average. So if I was looking for a rally, hope, optimistic, I don't know what causes the market to go up, but these 50-day, the 100-day, the 200-day, those would be my hope orders, hope targets to see if we got there. Bouncing out of oversold territory. Wheat needs a story though, and you got some rains in the plains. We need a bullish story though. Export demand, production problem somewhere else. That to me is what fundamentally causes the wheat market to go higher. If you're hoping for higher, you need something like that to happen. But when you have a $1.28 sell off from February to last week, retracement recovery type deals, those are you heard the term dead cat bounce, and they got that term because even if you drop a dead cat off the roof, it will bounce to some point. So $1.25 sell off, the market is bound to bounce, just to where and when. So, all right, want to talk about feeder cattle as well. Let's go in. Let's look at that August, since we're tickling 300. Here's 300 right there. So just getting up close to it. Yesterday's high was 299.90. Didn't get there. We'll see if we can take that out here. Great opportunities there. Getting to an overbought point on your RSI. Great opportunities. Want to remind you guys and look back at last year. So just rewind the clock a little bit. This is November 24 feeders that came off the board last November. They were in the 270 area in February of 24, and then hung out above 250 for most of the year. Then we had the nasty August sell-off. So if you bought LRP in these areas, you felt really comfortable when we hit that sell-off. But your LRP had a lot of value in there. But if you hang on to it and then didn't do anything with it between August, September, October, and when it expired, it likely ground right up to where maybe your coverage was, unless you're up in this 260, 270 area. Those policies paid out, and they're great levels to have. But if you're in this 250 area or bought something down in here, hey, we had a nice recovery into expiration. So your markets move, things change. This is an example of it. No feeders last year, trading $50 range. Keep that in mind. In your cattle markets, don't manage the nickels, manage the dollars in this market. So with that, I'm going to pull these charts out of here, maybe get those off screen. So yeah, planting weather. The general narrative going forward here as we kind of wrap things up is planting weather kind of remains favorable. Got a graphic I'm going to pull in. This is from Nutrient Ag. Eric Snodgrass had this up here in his morning deal. But nice little open window over the coming weeks for more planting progress to happen. The grain bulls, they need a story, and it's that time of year where you need a story to cause a rally. Otherwise, the crop's going in the ground, and as more uncertainty comes out of the market as the crop's in the ground, the path of least resistance is often lower. So one of those stories, though, that could support the bulls is Brazil. Safrinha corn crop in Brazil. We're starting the dry season, and we got to keep an eye on the weather in South America. Corn crop is a huge piece of their total corn production. Got a couple different crops growing around the world. It's not just in your own backyard, and I got to avoid my own backyarditis because we've had some great rains over the past few weeks. Feeling good. It's green grass out there in the pastures, and the crops popping up in rows here. EIA later today. We got the Fed. Appreciate you joining me. Keep an eye on your markets. Don't fall asleep at the wheel here. We'll be back tomorrow. Thanks for joining me today. Have a fantastic day.